welcome to McBox Capital channel here. My name is Michael Chu and this is my US market recap video for the week ending October 10, 2025. We have a pretty nasty day on Friday. The market had a huge drop around 10:55 a.m. Here. I believe that's like just roughly 1.5 hours into the market, and we start seeing this huge drop, and it pretty much followed through for the rest of the day as news broke out that basically here the Trump administration may threaten massive tariffs to China over its tighter restriction on rare earth export rules. So and basically they're saying and then I think later in the day it came out and said, oh yeah, there might be 100% tariff on China, I believe. Yeah, so that was after the close where it says there's 100%, and that's where I think we saw this dip here in after hours. But it did recover pretty nicely after he also said that he might still meet with the Chinese president here. So here's the Nasdaq Composite Index weekly chart. We have this strong uptrend here from this bottom, and we're still above the red line, which is the 10-week moving average. So we have a big bar down. This might be almost the biggest bar down. Well, there's one here too. So here's the one here, and then we have this big bar down here. And then in the beginning, we had that big bar down. So I mean, it's not technically rally is over yet because I think we're still above the red line. Generally, the red line kind of constitute like a rally here. So if you look at previous rally, generally when you're above the red lines, it's pretty nice run here, right? And then we have another short run here, another run here, and now we have this longest run so far in this bull market since 2022. Also, at least the news say this is now a 3-year bull market. Like, so we have officially hit 3 years, and so yeah, it could be longer term in the cycle here, 3 years. But generally bull market can run 2 to 5 years on average. So it's too early to say whether this rally is over because it's just 1 week and we haven't broke the red line there. But on the daily chart here, again, we see the largest daily move. That's probably more concerning because if you look at this rally from the beginning, the only day that is that big of a bar was the bottom here, which is normal because it's usually volatile at the bottom. But since that day, I mean, you have 2 days that equate to 1 day drop like this, but never a day where it drops severely. So I do classify this as abnormal behavior. So if the market, fall through and sell off here on Monday, say, and there's a high chance that it will follow through because we're so near the red line that usually it does want to test it, right? So here's two here that test, at least, not it didn't touch the line, but it came close to it. Now if we break through 50-day moving average here, like more severely and close down, then that's a much bigger concern because now institutions tend to follow this 50-day line, and they might start dumping a lot of shares, and that could, push this correction to much bigger. And obviously, the black line, which is 200-day here, is much further down. So the risk of, once it dropped below the red line here, there's a lot more room for it to go down, right, in terms of finding support. So that's the risk there. Now, if we do, like, say, gap down on Monday morning, and then start to rise by the end of the day, then that's probably more likely the action. Usually after a severe drop, market tend to bounce back to roughly halfway point to near the 10-day. As the 10-day may start to slide down, then we see how it reacts around the 10-day, and if it doesn't surpass it and get rejected there and come back down, then again that will constitute another negative, and that will be usually more, it can be worse because now we clearly see resistance line here. S&P also came down to the red line here, and then daily chart very similar. You see the biggest bar down. This one is very much close to the red line now. Here's Dow Jones, again another big bar down. Now with S&P and Nasdaq, we still the difference here between Dow and even Russell, which we'll show it in a second here, is that this one actually topped on last week on Friday. It never make a new high, and now we are at the red line here. If you go to Nasdaq, we actually make a new high in the morning before we reverse, and same as S&P, I believe. Okay, so S&P intraday high was Thursday actually, 6764, 6762 on Friday. So yeah, again, this downside reversal is not a thing, at least on the Nasdaq. Here's Russell. Russell, we broke out recently here to new high down. Unfortunately, it followed the same trend as the other index, which is it did reverse here this week. And we're not at the red line yet, but we're getting very close to it. Again, very similar chart. The largest bar down probably since this rally has started. So again, this one also topped on Monday actually. So not last Friday, but Monday. Uh, coming back to the weekly chart, the reason why I put this how many weeks up and down is because that's usually what happens is when we go for a longer period of a rally, we tend to have some sort of pullback or correction. And we range from lowest here 12 weeks, which is roughly 3 months, to now the longest is 26 weeks, which is technically probably like 6 months since April, right? So yeah, this is the longest rally. So it's not unusual for the market to pull back or correct it here. And usually it does go below the red line here, right? So those are all the pullbacks and corrections here. Most of them did correct, like usually 10% is the formal correction, technically, but yeah, I think most of them near at least 10% level or more. Here's the Innovator IBD 50 ETF. Surprisingly, it still end up green for the week, 0.2% up. Now, if we draw a channel line here, we can kind of see that it did kind of surpass the upper channel line. And this is a common tactic, to use when the stocks or anything get extended too much. Drawing upper channel line kind of give you a sense that hey, they're near the upper channel line. Generally, that's when you want to not be aggressive, buying anything. And usually they do reverse from that. So here's the daily chart. You can also do that on the daily chart. So just, slightly above the upper channel line. And you see a big reversal here, giving back a lot of the gains, down average 4%, over 4%, and it's now just slightly above the 21-day pink line here. Now again, we don't know if this is a big beginning of a correction here. If it does, we will expect follow-through days, on the selling side. Usually it will come down to 50-day line right here. So yeah, watch where your growth stock is. I think this is a good comparison. Is your stock at the 10-day? Is it still above the 10-day? Is it at the 21-day, or has it already gone down to 50-day? Those will be more relatively weaker. But yeah, between 10 and 21 days where this index at. So I would use that as a comparison how your growth stock is behaving. The other thing I want to say is like, as the market do go into correction, if it does, growth stocks would generally correct it, more, right? So, if the index go down 1%, growth stocks can go anywhere from 1 to 2, even 2.5 times more. So like, up to 2 to 3% even in some cases. Because of the tariff news, the Chinese market also took a big tumble. Actually, they to me, they sold off quite a bit more even. Look at this bar right here. It's down 7%. This is the KWEB. So a lot of the stocks are in this ETF here. And I mean, they actually topped like also more than a week ago. So it's interesting that it's almost like, yeah, it's interesting that it has topped a week ago, and then we have this huge bar down, and look at this. It's below the red line, which is the 50-day, and it decisively cut that line and never close, even bounce back. It closed at the bottom. So if we do get a follow through day, it could be very negative because that means it could go all the way to this black line here, which is the 200-day moving average. got a lot of heat lately because of that Baba announcing a lot of the AI chip movement and all that stuff. But yeah, here's the stock following very similar action. This one has gone up a lot, so it's still above the 50-day here. Um, but yeah, but it's been a significant drop here. You can go here, you can clearly see it's already 17.5% from the top here, just in like probably very short, right? 6 sessions here. So in 6 sessions, we dropped 17.5%. QQEW, the equal weight Nasdaq 100, there's not much difference here. It also came down to the red line. And on the daily chart here, this one also topped a week ago. Monday, Tuesday, Wednesday. So on Monday actually, Monday was top, and then now we're down to the red line here. So here is RSP S&P 500 equal weight ETF. But this one looks a little bit concerning. This one is actually below the red line here, so that's not a good sign. So yeah, look at this daily chart. Like, so we also top actually this one topped a week ago, and and here we clearly broke it very decisively. That's exactly what you don't want to see. Last time we came down below it, but we bounced back. So this market is kind of in very dire need for support right now, because if we don't get support at this level here, we're probably gonna head lower. Here we also want to look at the advanced decline line. This one's NYSE. You can see 300 to almost 2,000 stock down on Friday. So 300 up and 2,000 down. So the breadth is definitely very weak right now. The one thing I noticed in recent days, I do talk about on my live stream, once in a while, is this it never really hit new high here on this chart here, especially S&P, which is very weird. Like, it actually got lower high here and then lower high here as we make new highs, right? So the diversion basically saying the market breadth in terms of the number of stocks moving higher versus moving lower is definitely very weak. That's why it didn't make new highs. And then on Nasdaq, we did make higher high here. And then recently, again, we see some diversion here because the Nasdaq did make new highs in the last week, but here we didn't make new high. It did come back up, but it just wasn't as strong, right? So there was some weakness too. So this one on Friday was 640 up and 3,600 down. So that's a big ratio down. And you can see here volume is really high on Friday as well. So lots of distribution there. So IBD did change their signal to 60-80% allocation. Generally, that's still in the uptrend mode. But obviously they have to lower that. We did get a distribution day on both index on Friday. Again, this China tension thing could be easily resolved, maybe even over the weekend, who knows? Or it could escalate, right? So we don't really know which way it will go. So that's also another concerning thing. The other problem, which is already kind of starting to become a problem, which is the government shutdown. As of Friday, I heard they're already starting to lay off certain programs, people in certain programs. So that could add to the unemployment number. Maybe this is a short-term thing, or maybe this could turn even more ugly. I don't know. So definitely some issues there. In terms of accumulation versus distribution, there's definitely a lot more distribution, right? Meaning selling in higher volume than buying in higher volume here. 530 versus 88. On the stock side, sorry, industry group, but you can see 111 groups are being sold on higher volume. Only 13 groups are up in higher volume. It's interesting to even see probably some defensive area. You can see here throughout the week, health surprisingly holding up better. This is a net number of stocks under accumulation minus net number of stocks distribution. So we still overall see slightly more positive in the health side, but pretty much every other area, which is financial, being the weakest for a long time now. That is something that I've been kind of talking about. Why is financial so weak? That's usually not a good sign for everything, for the economy, for many things. So, and then here another thing that surprisingly is retail. Retail got hammered really hard on Friday as well. Well, throughout the week, but Friday it was hit hard as well. I think let me just briefly bring it up right now. I think XRT was down quite a bit yesterday. So this is the retail S&P retail ETF. It's down a lot for the week here. It's down 3%, but for the week it's down yeah, almost 7%. So it's selling off even before the Friday's news. So that's kind of very interesting as well. Yeah, technology, industrial, commodities, right? Even commodities are also selling off. Like gold has come off the highs. A lot of things have come off the highs, and so yeah. So there's not many areas to hide right now. So that's the biggest problem. News took a big dive. It was around 4.15 or so percent, and then took a big dive as people buy more bonds. The US dollar has been climbing steadily, and then on Friday it did drop a little bit, 0.5%, but overall it's a big move this week. I mean, we could be hitting more highs if the market, and again, this could be also a sign that the market might go down more because if the US dollar continue to go up. And then the oil took a big tumble as well, 4.3%. So again, the tariff news really hurt, from an economic sense. Just like back in early February to April when we heard all those tariff news, the market corrected quite significantly. I don't know if this is going to be as significant this time, but we'll see. Again, it's too early to tell. Gold, surprisingly, gold it dropped on Thursday pretty hard. This is probably from overheated, extended quite a bit, and but the overall action is still possible that it can go higher. And then on Friday, we see a bounce here, which is very interesting. So gold might still have more room to run, but a lot of stocks, gold stocks have dropped to near its 10-week moving average. I mean 10-day. So that is a little bit concerning. I talked about that where the gold stock actually slightly performed weaker than the gold price. Here's GDX, which is more of gold stocks here, and you can see here like the bounce is kind of weak. Here, well, first it dropped pretty hard below the 10-day, and then on Friday the bounce was very weak, right, 0.2% versus the drop on Thursday, which is 4.4%. So that is a concern, So yeah, Silver Trust here, still making new high. It rebound from Thursday, so this one looks slightly better as well. Well, very strong as well, and then took a big dive. It started also pulling back on Thursday from a little bit overheating here, and then Friday. Look at this. It not only break the 10-day, it go all the way to 21-day. So copper is obviously a big um, economic indicator in the world, and if we have tariff wars, it's going to impact the world economy, and this react very strongly. ETF and nuclear ETF here also pulling back pretty hard on Friday after going up pretty high here. Here's Bitcoin. Bitcoin also reversed since Monday, coming back down. Now we are at the red line, the 10-day, 50-day moving average. Ethereum, this one looks a lot worse because it broke the red line already. So again, not a good sign when we decisively break the red line. We need to see a bounce right away. If not, probably there will be more selling pressure. We see NVDA chipmaker, Taiwan Semiconductor reporting, JP Morgan, Goldman Sachs, Oracle has its AI World Conference. We see Wells Fargo as well reporting, and Interactive Brokers also reporting. The ETF, overall, it's obviously a big down week. Down 6% from the high here. But technically, it's still in a pretty nice uptrend. Like even you draw this trend line, is still at the bottom, is still showing a pretty strong angle there. On the daily chart, of course, again, the biggest bar we've seen since this run here, very similar to the index. We are at 21-day. So we'll see a bit, whether it'll bounce and test the 10-day here. That's usually what I look at. Here's NVIDIA chart on the daily. Again, we try to come out this week, right here on Wednesday, Thursday, but very quickly, after taking positions, I got shaken out on Friday, as you see here, big bar down. It still looks okay. I mean, technically, it's just around the 10-21 day, and it's possible that we could test it more, even to the red line here. So we'll see what happens. But if we don't see a bounce, then it'll be more concerning. Since TSM also reporting this week, look at this bar. This one was looking really good. This is one of the strongest, stronger big cap semiconductor. And look at how fast it came down again, down to 21-day very quickly here. So reporting this week. Broadcom also very similar action to NVIDIA. It tried to come out and it fell very quickly. Again, now it's now near the red line. So that's the biggest problem I think, right? Like is that some of these stocks are already near the red line because this is where a lot of institutions come support the stock. If we don't see support and it just decisively break it, then we could see more follow through as selling pressure builds up here. Moving on to the software group here, this one has been weaker than the semiconductor, and now it's also dropped to the near the red line. And in the software group for mega cap, we have Microsoft. So this one was starting to climb back right here, and then it started to top again and pull back. Now we slightly below the red line. Now this one has come below the red line a few times, many times actually, and it was able to hold most of the time. So that is a good sign. So Microsoft have been in correction for a while now. So we may have some more consolidation here, but I'll be paying more attention to this because one of the things I see here is that the chart is very tight. Generally, when the stock trading tight, it means no one wants to let go of the stock. And I mean Friday is a bad day, but when you look on hindsight, it's only down 2% compared to many other stocks, which has down quite a bit more. So Google has been sliding more as it has, after this nice run here, and then it just continued to slide down. And this week we finally broke the 21 day. So again, um, sometimes when stocks break key moving averages, they can go down to the next level very fast because there's a gap here. It could fill that gap pretty fast. But that's why you need to find support right away. If not, there will be more selling pressure. Meta has been weaker. It tried to come back here as well, and then now it got knocked back down. Amazon, despite the Prime days and stuff happening, it didn't make too much of a move. It did try to come back up, but again, it got knocked back down. Apple, which is one of the stronger stock as well recently, holding really tight after the iPhone release and trying to break this high here, but it didn't. And came close to it, but it never did. And yeah, and then Friday it just took it back down. And this one is quite a severe break because it broke 21 day, and now we are very close to the 50 day now. So just by looking at this chart and many other charts earlier, it seems like many of them are breaking their 21 day, and also decisively, and that means there's a high chance most of them will test the 50-day moving average, which is the red line. Here's Tesla. Tesla also, been doing well recently, but lately, I see that trend line right here that I drew. It just have no power every time it comes near that. And again, Friday, same thing happening, down 5%. Here's Netflix. Netflix also slowly coming back up, surprisingly, and very quietly. And here's a nice trend line that it broke above it Thursday and Friday. And you know, when you consider the market on Friday, this one dropped very little, less than 1%. So and because they already booked this trend line, is still sitting above it. To me, this is a very good sign. And this one has been correcting for a while, so it's been tested at the lows here, and finding support. So that is a good uh, bottom channel line here in terms of support. But yeah, I think this has a good chance right now. So because it has given enough time and it has been tested many times here at the lows, and now it's holding above the 10-day even after Friday. So I really like this action. So thank you for watching this video. I'll be producing another video about my growth stock list. Of course, not many stocks are doing well right now, so many are in downtrend mode. But I do want to talk about the downtrend action more this week, so please stay tuned to that video. Thank you for watching. Please like and subscribe and follow me if you can. Thank you. Have a good weekend.